In a recent Tuesday night podcast, we talked with local business owner Kevin Fruman, who owns the National Lumber Company, a company that's been in business for over 100 years. And we heard from him how this downturn in the housing market is slowing down his business, affecting lumber companies all across the country, and how there's more trouble on the horizon. Home sales have declined nationwide, and home prices are also falling very fast. And we know that's because of mortgage rates almost doubling within the last year. But this isn't the only problems that we're having in the housing industry, as people are just not spending money. I've talked with contractors. They have had, clients cancel bathroom renovations, new kitchen renovations, and it's now affecting local suppliers. And we're not talking about small suppliers. We're talking about big suppliers that have seen this before and that have been in business for almost 100 years.
It was really great to have Kevin Fruman back again as a return guest. We had spoken to him back in 2021. So it was really amazing to hear the changes that have occurred in such a short period of time.
One of the things, that happened was lumber prices skyrocketed in the middle of the pandemic. Call it supply issues, whatever you want to call it. We know that lumber packages make up about 10% of the housing's overall square footage cost. And companies really buy it by 1,000 board foot at a time. That's basically how they create their pricing. When we spoke to him a year ago, for like the last 10 years, it had been averaging right around $300 to $400 per 1,000 board feet. That price during the pandemic shot all the way up to $1,800 per 1,000 board feet. And now it's somewhere around $500 to $600 per 1,000 board feet. And as he speaks with a lot of the other experts in the industry and the wholesalers, the suppliers themselves, they feel that is where the prices will stay, which is, Melissa, double what it was prior to the pandemic. And we know that prices of anything that doubles in just 2 years is not good for the economy.
Kevin had explained that a roughly 2,000 square foot home, the average framing package pre-pandemic was about $30,000, and today almost double at $50,000.
Yeah, and one of the things that Kevin had mentioned was that the mills are actually, holding firm to the prices. So that's one of the reasons why they feel that the lumber prices won't drop from where they are today. And he gave an example that this week alone, one of the lumber suppliers, the mills, actually pulled 700 tractor trailer trucks off of the road, off of the market, refused to sell it because they couldn't get their price.
The mills, I think, are now at the point where they're just not going to go below anymore. They're going to hold back until they get the number that they want. I have a vendor from Boise Cascade, who's one of our largest suppliers, and he told me this week that Canfor is a lumber mill. They took 2 million board feet. That's, to dumb it down, that is approximately 700 tractor trailer loads of lumber off the market this week because they couldn't get the number they wanted.
Now, Melissa, this kind of creates, sort of like a real difficult situation or scenario because, if lumber packages, and we're just talking about the lumber package price in this, we're not counting anything else, drywall, insulation, roofing, siding, shingle, anything like that, right? Just the framing lumber alone. And all the other costs are extremely high as well. And, so the problem that we have is, how do you get renovations completed, right? Affordably, and then be able to sell those houses after you spend $40,000 or $50,000, $60,000 on maybe repairs, right? And then how does a new home builder, when we have interest rates as high as they are and affordability issues just, taking most of the buyers out of the market completely, how do builders continue to build, and how do home remodelers even stay in business when people are canceling contracts due to costs?
The real problem with this comes down to the rate of inflation. Are these companies really going to be willing to raise people's salaries?
Yeah, I don't know. I don't think so. And we'll kind of dive into this a little bit. But Kevin had said that, for the first time in years, he was letting drivers go early, letting them go 1, 2 o'clock in the afternoon because he didn't have enough work to keep them busy. One of the questions that I asked him was, are you going to be forced to lay off. So many people serving the housing industry or just business in general have really ramped up, not just with stocking materials, right, to make sure that they're available for people to buy, but they've hired more people and, they've paid recruiting bonuses and things like that. As these businesses are starting to pull back in sales, obviously, because consumer spending is slowing down significantly. I mean, we're seeing that even with Amazon, closing facilities, FedEx grounding planes and shutting down offices. So we're seeing this all over where affordability issues are starting to cause problems for employers. And not only that, Melissa, but it seems like the regulations are getting even more stringent and causing businesses to spend a lot more money in developing products that are greener initiatives. And I get it, but I don't think these, politicians or, some of these lobbyists that are pushing these products realize that people just can't afford it. So the more expensive that we make things, the worse our economy is going to get as people are trying to scramble to pay their necessities like groceries, utility bills, transportation costs, and housing. And after asking Kevin, what's the answer? Are these building materials going to come down? I mean, he just simply said he didn't know how they could.
One of the issues we talked about with the labor market is the lack of skilled labor.
Melissa, when I was in high school, even middle school, I think I was in the 7th grade and I took drafting classes, right? A lot of the trade classes that we had back then. When I got into high school, I took 3 years of wood shop, which really taught me the fundamentals of building things, and probably was instrumental in me getting into construction. And, we're not teaching our kids that nowadays. So a lot of the issues that we're having with pricing is that these available contractors are coming at such a hot commodity, right, that they're charging whatever they want or whatever they can. I think they're going to get burned by that too, because people are just pushing back, overall. But the issue with the suppliers, Melissa, is really that there's a very limited pool of customers. So when you're dealing with like a national lumber company that's been in business for 100 years, these companies are running on very thin margins. You would like to think that, being optimistic, that they would continue for another 100 years. The problem is the limited amount of skilled labor that's doing this work. They're going to be very selective on where they buy their materials, and relationships may not win in this game. When it comes down to nuts and bolts and profit, making money or not, these contractors or pool of skilled labor is going to be, going to whoever can sell them the product for the least amount of money.
So Kevin also gave his thoughts on, his hopes for survival, especially within the investor market. He had really high hopes on the multifamily housing rental market remaining strong.
We deal with a lot of multifamily customers. We try to sell those projects when they're being built, but we also sell to a lot of apartment communities too. I think the rental market is going to be really, really strong. And that's just the vibe that we have.
And I guess what he's saying by that is that as now he's seeing that residential housing where the consumers aren't spending the money on building materials and they're not hiring the contractors, that he is hopeful that, a large portion of his sales will be sold to contractors or investors that are fixing up their rentals. Melissa, this is something that, if we're looking at the numbers with the GDP and the growth in the last quarter or the last 2 quarters, we can take a look at that specifically. Now, guys, I am not an economist and I don't profess to be, but I'm a consumer, I'm a builder, I'm an investor myself. And when I'm looking at the GDP breakdown that is specifically related to housing, and I'm looking at the gross domestic product growth in Q3 of 22, I'm seeing a GDP of 2.6%. And I'm looking at how is that made up? Really, the bulk of that was made up with net exports of goods and services. And that basically means that we're shipping out more than what we're bringing in. And a lot of that, 2.8% is wrapped around car parts, shipping car parts, and petroleum. When we're looking at owners actually investing or spending money in their real estate, it really comes down to residential fixed investment. If you look at the last several quarters in the negative, but really fell drastically to minus 1.4%, according to this chart. Now, what that tells me, Melissa, is that, business owners are not reinvesting in their assets. They're not spending money on capital improvements like Kevin is hoping for. These real estate investors are actually getting hit with higher costs as well. They're having a difficult time with finding labor to make improvements and to provide, regular repairs and maintenance on their buildings, as well as the higher material costs as well. And they're making less money. Their margins are falling also.
So what can be done? Is this by design?
I think, unfortunately, I think that we're in a situation where, we allowed the low cost of borrowing money and the investor pool of, jacking up the real estate market in a lot of the markets across the country for the last 2 years. Literally a third of the houses being bought are from real estate investors. Now we're in a situation where we have lack of affordability. Costs are going up all across the board, just basic necessities, groceries, fuel, transportation costs. We're not seeing the job growth that we hoped for. The Fed tried to pump the brakes. I think we're in for a crash landing. And, and who's going to win at the end of the day? I think, we're pushing legislation that is going to raise building costs, raise housing costs. We already have an affordability issue that people can't buy unless they make more money, unless we see wage growth happen, Melissa, and these businesses magically starting to become way more profitable. How do we do that when people are backing off their spending? Something has to change. I see we're in for a very turbulent next couple years. Buckle in, guys, and get ready for the ride.
I mean, how could it not? We haven't even seen the other side of this. Time will tell on everything, but it's really looking like it's going to get worse before it gets better.
Guys, thanks for watching this video. If you liked it, you can hit the thumbs up, and it'll let Melissa and I know that you did. As always, we love it when you subscribe to our channel. Hit that bell. You'll be notified every time we upload content just like this.
Absolutely. We love those comments and questions. Keep them coming, and we'll see you next time.
See you next time.
Sachs Realty, Maryland broker number 607720, office number 443-318-4514, equal housing opportunity.